If you're in your 20s or 30s right now, retirement probably feels like a lifetime away. But here's a harsh truth. The choices you make today will literally determine whether you live comfortably or struggle later in life. You might not have a lot of options right now, but there's one powerful tool that gives you a massive advantage: investing early. It's simple. If you want to live a financially secure life, you need to grow your wealth. And that starts with understanding how to make your money work for you. Let's take a quick example. If you start investing just $500 a month at age 25, earning about 8% annually, you could end up with over $2.1 million by the time you reach 60. So today, we're breaking down 10 of the smartest assets and investment choices you should consider while you're young. These aren't just theoretical ideas, they're proven strategies that can help you achieve long-term wealth and freedom. Ready? Let's dive right in. First up, one of the best investments you can make before turning 40 is index funds. Index funds are basically collections of stocks that track major market indexes, like the S&P 500. Historically, these funds return about 8 to 10% per year, on average, which is far better than leaving your money sitting in a savings account, getting eaten by inflation. The real beauty of index funds is that they're simple, low-cost, and automatically diversified. You don't have to stress about picking individual winning stocks. Instead, you own a tiny piece of hundreds of companies at once, from Apple to Amazon. Here's a pro tip. Always keep your fees low. The lower the management fee, also known as the expense ratio, the more of your hard-earned money stays in your pocket, compounding for you. To make your portfolio even more stable, you might consider adding about 10 to 20% in bonds. Bonds act like a safety net. They won't make you rich overnight, but they'll protect your portfolio during market downturns. And if you're feeling a bit more adventurous, you could even explore crypto index funds. These combine the diversification of an index fund with the explosive growth potential of cryptocurrencies. Just remember the golden rule: higher rewards always come with higher risk. Next on our list is real estate, one of the most tried and true paths to wealth. Think about it. Property values tend to rise over time, and people will always need a place to live. A great place to start is by buying your own home. This immediately cuts out rent expenses and lets you build equity with every single mortgage payment. From there, you could consider branching out into rental properties, multi-unit homes, or even commercial buildings to generate passive income. But what if you don't have a huge pile of cash ready for a down payment? That's where real estate investment trusts, or REITs, come in. Through platforms like Fundrise or Realty Mogul, you can invest as little as $500 into large-scale real estate projects. You'll earn a portion of the rental income and property appreciation, just like a traditional landlord, but without the hassle of managing tenants or fixing leaky faucets. It's a fantastic way to get into the real estate game without needing a massive amount of capital upfront. The third investment, and maybe the most important, is you. Your 20s and 30s are the prime time to invest in yourself. Education is one of the few assets that truly multiplies your long-term value. Whether it's getting an extra degree, learning a skilled trade, or mastering digital skills like coding or marketing, the more valuable you become, the more you can earn. However, be smart about it. Not all education is a good financial investment. Some courses or hobbies are great for personal growth but might not directly translate into higher income. Focus on career-driven learning in fields like business, finance, technology, or communication. And please, don't forget about financial literacy. Understanding how money, taxes, and investing actually work will pay dividends for the rest of your life. It's the foundation for everything else we're talking about today. Fourth, let's talk about startup businesses. There is no investment with a higher potential upside than starting your own business. When you're young, you can afford to take more risks. Even if your first venture fails, you'll gain priceless experience that you can carry into your next project. A successful business gives you unlimited earning potential and full control over your financial future. And you don't have to build the next Amazon or Tesla. You can start small: an online brand, a freelancing agency, or even a niche e-commerce store. If you'd rather invest in a business instead of starting one from scratch, you could consider becoming an angel investor or joining crowdfunding platforms like Kickstarter or Seed Invest. If you go this route, look for businesses with strong, passionate founders, a clear vision for the future, and the potential for massive scalability. It's a high-risk, high-reward game, but the returns can be life-changing. For our fifth point, let's dial back the risk with Treasury Bills. T-bills are one of the safest investments you can possibly make. They are short-term government securities, which means your returns are essentially guaranteed by the full faith and credit of the government. You can choose from different durations, like 90-day, 182-day, or 364-day bills. While the returns aren't going to make you a millionaire, T-bills are perfect for preserving your capital or temporarily parking cash while you plan your next move. They're especially great for risk-averse investors or for anyone who wants stable, predictable returns to cover future expenses. This strategy is called asset liability matching, where you invest specifically to cover upcoming costs like tuition, a down payment on a house, or to build up your emergency fund. It's the financial equivalent of a security blanket. Number 6 brings us back to the stock market with growth stocks and dividend stocks. Your 20s and 30s are the best time to take calculated risks, and growth stocks are a perfect way to do that. These are stocks of companies that are expected to grow much faster than the overall market. Think of innovative tech giants like Nvidia, Tesla, or Shopify. Yes, they can be volatile and see big price swings, but your long-time horizon gives you plenty of time to recover from any short-term losses and ride the wave of long-term growth. On the other hand, we have dividend stocks. These come from stable, established companies like Coca-Cola or Johnson & Johnson that pay you a portion of their profits just for owning their stock. This provides a steady, reliable stream of income. The best approach is often to combine both. A mix of growth and dividend stocks can create a strong, balanced portfolio that gives you both exciting upside potential and reassuring stability. At number 7, we have exchange-traded funds, or ETFs. You can think of ETFs as a middle ground between individual stocks and mutual funds. They allow you to invest in entire sectors of the economy like technology, healthcare, or renewable energy with just a single purchase. They trade on stock exchanges just like normal stocks, which makes them super flexible, easy to buy and sell, and very transparent about what you own. Some popular examples include the Schwab US Large Cap ETF, which tracks large American companies, or more specialized ones like the Global X Robotics and AI ETF. If you're new to investing, ETFs are a fantastic, low-cost way to diversify your portfolio quickly without having to research hundreds of individual companies. Next, at number 8, are commodities. Commodities are raw materials like gold, oil, silver, or even agricultural products. They're a great tool for diversifying your portfolio and protecting your money against inflation. When the value of the dollar goes down, commodity prices often go up. You can invest in them directly, for example, by buying physical gold or silver coins, or you can invest indirectly through ETFs and mutual funds that focus on commodity-based companies like mining or energy corporations. Keep in mind, though, that commodity prices can be highly volatile and unpredictable, so it's wise to keep this as a smaller, strategic portion of your overall portfolio. Ninth on our list are annuities. An annuity is essentially a contract you make with an insurance company. You invest a lump sum or make periodic payments, and in return, the company provides you with a guaranteed stream of income later in life, usually during your retirement years. They come in different forms. Fixed annuities offer predictable, guaranteed returns, while variable annuities have returns that depend on the performance of underlying investments. Annuities can be a powerful tool for ensuring you have a secure retirement income that you won't outlive. However, you need to be very careful with them. They can come with high fees and commissions. So it's absolutely crucial to read all the fine print and fully understand the terms before you invest. Finally, at number 10, we can't ignore the modern frontier of wealth creation, cryptocurrencies. While extremely volatile, they have generated incredible life-changing returns for many early adopters. Some initial coin offerings, or ICOs, have produced returns of over 13,000%. If you decide to dip your toes into the crypto world, you must treat it as a higher risk, higher reward play. It's wise to limit it to a small percentage of your total portfolio, maybe 1 to 5%. Stick with reputable, well-established projects like Bitcoin, Ethereum, or Solana. And always do your own homework. Study the project's white paper, understand its purpose and technology, and only invest an amount of money that you are fully prepared to lose. So, let's wrap this up. If you're in your 20s or 30s, your single biggest advantage is time. Compounding, continuous learning, and calculated risk-taking are your greatest tools for building wealth. Whether you choose index funds, real estate, your own education, or even a small crypto investment, what matters most is that you start now. The longer your money has to work for you, the harder it will work. So take that first step today, even if it's a small one, and your future self will thank you for it. If you found this video helpful, make sure to like, subscribe, and share it with someone who needs to start investing. Check out our other videos on financial freedom, and I'll see you in the next one.